the timing, how do you feel about it?
Well, first, thank you so much for having me. And this is an exciting day for Magnetar, for our investors, and especially for our partners at CoreWeave. You know, for us, this is one step in a long process and a beginning step in that process. So sentiment and timing, you know, it's really about execution of the company today.
And will you therefore remain a long-term committed holder even as it goes public? I know you've exited a little bit on this particular liquidity moment.
We actually have not exited at all. We've bought in every round prior to this, and we remain committed to the company. You know, this company they're the gold standard now for AI infrastructure. So as this transformation happens, right, they're the people, they're the picks and shovels of this industry. You know, when we invested in them, I think they had $12 million of revenue at the time.
What year was this?
This was only 4 years ago. This past year was almost $2 billion of revenue and climbing quickly. So it's pretty incredible what they've done. It's a great management team.
In many ways, the timing hurts because of the narrative that we get bombarded with. Joe Tsai saying there's a bubble in AI capacity. We've got TD Cowen trying to point to Microsoft moving away from data center leases. How do you feel about AI capacity right now? You
know, it's funny, we read and hear the same stories, but it's not what we see in the actual business. The business itself has insatiable demand. They can't keep up with the demand of the business, which is why it's so exciting for us. And you know, I'll walk you back to how we think about it at Magnetar. You know, we watch earnings reports of all the major companies, and we add up CapEx. But where does the CapEx actually go? It goes into these innovative companies like OpenAI. And then OpenAI, you see the revenue traction. You know, they announced, I think, a couple days ago on Bloomberg that they were $4 billion last year, and I think it's $12 billion this year and $27 billion next year. I think that's one company in one sector. You start to add up all of that revenue, and what people don't understand about compute is it's the single biggest driver of the expense structure of these companies. 30 to 70% of revenue goes directly to pay for compute. Right now, CoreWeave's the gold standard for that market.
Before, I've got to ask you about OpenAI a little bit more, but what's so interesting is the way you've done it is you're lending. And your background's fixed income, so you know all about lending.
Yes.
You're an equity provider. Why go so across the capital structure of a company like this that ultimately only has a limited amount of ultimate customers, the hyperscalers?
Sure. Well, first, their customer base is growing quite quickly, so we'll hit on that in a second. But for Magnetar, what we're really good at is lowering the cost of capital for capital-intensive companies. And so we haven't been in technology near as much in the past, but now we're seeing them cross. Now technology is capital intensive. Technology, for AI to be effective, you need GPUs, you need energy, and you need real estate. 3 of the most capital intensive industries on the planet. And people like Magnetar can come in and really help companies and partner with them and lower their cost of capital. For us, we want to participate across the capital structure of these companies.
You mentioned customers. A big lease was signed with OpenAI by CoreWeave. Interestingly, OpenAI now has exposure to CoreWeave shares on the back of that as well. But I want to bring you the latest post out of Sam Altman, because he's saying, look, the frenzy to get hold of the latest image generation ChatGPT is, quote, GPUs are melting. Tell us about OpenAI and your bet there. You are coming in when their valuation is $300 billion with a sizable investment. Is it about $1 billion you're coming in?
So that was reported that we're looking at the investment, and we are looking. We love the company. We love management. They're doing a great job. That's in our investment committee right now. But we're also looking at many other companies across the sector. So that investment has not been made to date.
Tell us, therefore, where you are looking and where the value accrues. You say you're about capital expenditure, so it must be on the AI infrastructure layer and the large language model layer. But everyone's getting excited about the applications. Would you go there?
Yeah, for us, we're really focused on capital intensity, businesses that need to drive down their cost of capital. That's where we can be a value-added partner, and we can be a value-added partner not just to companies, but to venture firms who aren't used to looking at this type of capital intensity.
You've obviously been in CoreWeave, for example, for a long time.
We have 4 years.
And you're going to stay with it through the public markets.
Yes.
How do you think they now need, and Mike and Trator now needs to talk to the market about insatiable demand? At the moment, we're worrying a little bit about the amount of leverage. We're worrying a little bit about ultimately how they have financial controls. This moment of being public, what does it mean in terms of how the business is run?
Yeah, I think there's been some misconceptions in the marketplace about the debt load. If we go back to real capital-intensive businesses, people take orders and bring it to the bank, and the bank lends them money to fulfill the orders, and they pay back when the orders come. That's exactly what Mike and his team have done on their financing journey. And so in order to get the most efficient cost of capital, if you get long-term contracts, which they have with companies like Microsoft and OpenAI, those are readily financeable in the marketplace.
And Microsoft's not pulling away.
Not only is Microsoft not pulling away, these are take-or-pay contracts. So Microsoft has contracts for many years, and they'll continue to pay every month. It's in my mind, it's sort of like we go and release a car, right? And of course, it depreciates the day you leave the lot, but you still owe for 4 years on your car lease, and that's the same thing here. And I think again, these companies need a ton of compute right now. The best provider of compute for all of these companies is CoreWeave.
I'm so interested in Magnetar. You're in everything at the moment that's interesting to our audience. So where do you now focus? You just told us about it's about the capital expenditure element. Are there regions that you look to? What is the next company? What is the next OpenAI for you?
Yeah, sure. We have a lot in our pipeline, and we've made hundreds and hundreds of investments. This is our 20-year anniversary. But it's really about a consistent, methodical process to invest. We want to understand assets, we want to understand cash flows, we want to understand downside scenarios. So we look a lot different than a normal equity investor. We're very focused on analyzing assets, the cash flows they produce, and making sure companies have the right runway.